Hello and welcome to Grok Trade. It is Monday, January 3rd, 2011. My name is Jerry Usher, graduate student of the Grok Mentoring Program, and let's take a look. Where'd it go? There we are, the S&P 500 today. Well, actually, let me start off by saying Happy New Year to everybody. It's been a while since I was able to talk with each of you, so I hope you all had a great Christmas and a Happy New Year and all that stuff. And here we are starting the trading week. Nice to see some volume come in today. You can see the S&P had a nice bullish day, breaking through some support here, or some resistance rather. Nice solid bull day today. We can take a look at this trend line here that I have. It's a little conservative. If we look back here past the starting back in September, we tagged it here, tagged it. Here we broke above it only to come back through it, so we would call that a jab. I could possibly move this up on top of here and give it a little bit more room, so that's why I call this a little bit more conservative, because I'm not exactly at the high of the last swing there, but it got tagged a few more times back here. So I'd rather be conservative than try to be over guessing things and messing up my ratios. So there we go. We're not going to have any resistance here until up into this 1300 area. Let me show you that green line there. That green line goes back to this area here. I'll pull that back out again. This is September 2008. Okay, this is where we are. We just broke above that. We were basing on this line here, and that's that top resistance line right there. Let's go back. That is this line right up here. So they're both converging, the trend line and that resistance line. Strong resistance at 1300 on the S&P 500. So things are looking bullish. Now, our bull stock for this week is going to be the same bull stock that I possibly alerted to some of you last week before Christmas. It is GNTX, GNTX. We're looking at a daily chart here. You can see that we had a high base. There's our high base. We had big breakout here in the beginning of December 3rd. Consolidated a little bit, only to break up a little bit more. Then we had a long base, and I was hoping, the last thing I said in my last video before Christmas was, if we could, it would be really great if this thing could just base sideways until we hit this support line of the lower trend line. And look at where we are today. I mean, we're right there. I couldn't plan that better myself, so I'm really liking the way this looked. Didn't like this day too much. This was December 30th. We kind of broke out only to sell back down. That was a little bit of a fake out, but here, now that we raise our top resistance line of the base, and it's hard to see, the 20-day moving average is also there. That's this lighter blue line. Okay, so we're all banging into that. This thing is getting ready to pop up. Nice profit taking areas as we climb up here, especially once we get in this range. If we do break out, look for volume. We already have some volume confirmation here. If I try to blow that up a little bit, it won't stay for me. There it is. You can see we did have a little bit increased volume. We'd like to see on the breakout a volume above this black 20-day moving average that I have on there. That is looking very, very nice. Let's take a quick look at the weekly. You want to make sure the weekly's trend is in your favor, and it is. As you can tell, we're in an uptrend here. And the 60-minute, you can see that we did make a higher high today to sell off. It already looks like we're starting to round out. It looks like we have a bull pullback here forming, and we're ready to go off higher and off to the races. I'll be waiting for this one if it does. Now, our bear stock of the week, last time I talked to you, it was SHLD. Let's take a look at the daily, and you can see that it's no longer looking nice at all. This is not a short whatsoever. We had this trend line here. We also had the shadow line, and things were looking well. If I back this up, that was the last day of our video. We still closed below that shadow line, so things were still, they weren't the best, let's say. It was above the 20-day moving average the whole time. but deals were off when it broke on here. The 27th, we closed above it, only to keep closing above it day after day. And there we are currently today. So this is still a weak company. If it does start to break down again, it could definitely be a great possible shorting candidate. Instead, I would like to follow PEG, PEG, Public Service Enterprise. And you can see here, if I shrink this down a little bit, we are in a downtrend. We are currently in this mini uptrend. This is what we would call a bear flag. And if I extend this orange line, you want to make sure your two lines are parallel there. If I extend it, you can see we are currently moving up, yes. With the markets being as strong as they are right now, it's not a very good idea to be short, but anything can happen. Tomorrow, could be the hugest bear day we've ever seen and could be start of a huge down leg. If so, you want to be prepared. This guy is in my back pocket just in case we turn bearish. If we can close down, if we start breaking out of this flag, that would be a signal to go ahead and short this. Right now, just a watch, wait for the markets to see what the markets are going to do, and then if they do decide to turn around and break down, this could be a good possible candidate. You can see here the weekly, we are in a consolidation area, but we do have a slightly lower high here. From this previous high, we have a lower swing high there, and then maybe possibly another swing high forming right down here. Lower swing highs, so the weekly looks like it's almost ready to get into that downtrend and to confirm our trade. So keep your eye on PEG. I hope you all had a great trading day today, and looking forward to talking to you the rest of the week. Take care, everybody.